Good afternoon, everybody, and welcome to our monthly Hot Stock panel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to bring these monthly panels to you. 7 hot stocks to watch for this summer. This could be a hot summer, especially coming off of a pandemic year. Everybody's itching to get back into a lot of different things, and I think together today that our panel has put before you some really good stocks to pay attention to, keep on your radar, and possibly make some good money. We do this once a month, every month, and we're glad that you're here and that you're supporting it. If you can hear me loud and clear, please respond in the room, preferably with VV Nation, to let me know that the technology on our side and that Joey, my producer, is doing everything he's supposed to be doing, because he's not always doing that. Right, Joey? Say hi, Joey.
What?
Exactly. So you know what I'm going to say? I'm going to say welcome to all of you, and just because Joey was falling asleep, you got to know I got to do that for him. Joey's always awesome at what he does. All right, so with all of that, let me bring on my panel. It's going to be myself. We're going to be joined by my esteemed colleagues, Steve Chappell, as he's drinking a little cup of coffee, and Patrick France. You know, this is real. This is real live TV, folks. And they're going to bring a couple of stocks to the table. Steve's going to have 3. Patrick and I are both going to have 2. It's going to bring up to 7 stocks. Before they come on, they're going to talk a little bit about themselves and what they do in regards to our education department. And you'll get a better feel of who we are if you don't already know that. A couple of things I want to get out of the way, though, before we get started. 1, if you're brand new to the channel, this is our live streaming channel, and we're still growing it. If you're new to the channel, please hit the subscribe button, subscribe to the channel. We're trying to grow this channel just like we did our other channel as well. Number 1. Number 2, hit the bell icon so that you'll be alerted when these events do happen, whether it's Trending Thursday or Hot Stock Panel or anything that we stream live here on VectorVest, YouTube. You want to be alerted, and of course, hit the like button. Hit the like button because that tells us that 1, you like the content, and 2, it helps our algorithm to get this video shared across YouTube land. Couple of other things. Register for our free Trade Like a Pro webcast today at 6 p.m. There's other times as well, but we do have one today at 6 p.m. By Jerry D'Ambrosio. He will be showing you what the Trade Like a Pro course is all about. And if you're not a trader in the market, might be something you want to keep your eye on. There's a link in the chat right now. Click on that link so that you can register for that webcast tonight at 6 p.m. Also, Jerry D'Ambrosio will be my special guest on Trending Thursday tomorrow. And talking about Thursday, Patrick France will have his Facebook Live and YouTube Live stream tomorrow about the VectorVest app, the mobile app, at 11 a.m. tomorrow. You don't want to miss that. Something else. We have a Financial Independence Month. This is our financial independence. We just had the 4th of July. Happy birthday, America. And so we're going to be doing a Financial Independence Month. This is where you're going to get free access to our income investing video training series. Free. It is free, and check it out. If you go to www.vectorvest.com/FIM Financial Information Month, FIM, you will get access to our free income investing video series.
Financial independence.
What did I say? Financial Independence Month. Stop correcting me. I got this.
Okay.
All right, I got this. You just sit. You can sit there and just let me do this. All right.
Stop doing your job, Joey.
Whatever. And last but not least, last but not least, we're giving away 2 mugs today. You got a type mug in the room. And we're giving away 2. That's right, 2 mugs today. And good luck to everybody that's there. All right, we're going to get started. I got all of that out of the way, and it's only 5 minutes in. Woo! I'm pumped today, baby. I got my Cafe Bustelo in my VectorVest mug. Look at that. And I'm pumped. I'm ready today. We're going to have a lot of fun. And we're going to start off with Steve Chappell. And he's the director of, say it, Steve.
Trading systems development.
I can't ever get that right. But
Yeah,
Steve's a good friend of mine, and I love it when he's here. And he's going to start off, and he's going to give you 3 picks for stocks to invest in for a hot summer. Steve, let him know who you are. Take it away, my friend.
All right, thanks, Glenn. My privilege to be here, guys. Really excited to do these things, and I'm glad you're here. I mean, there's so many different places you could be right now, and the fact that you took time out of your busy schedules to be here says a lot, and so we're happy you're here. So as Glenn mentioned, my name is Steve Chappell. I've been with VectorVest now I'll be 20 years in October. So it's been quite a journey, and I've really seen this company grow from its infancy stages back when, boy, they were just coming up off of floppy disk when I started. And I'll never forget, my first several months here used to actually have to help people program their modems to connect to our service, which was challenging to say the least back in those days. It was very, very new. And anyway, it's been a fun journey to be a part of, and look where we are now, guys. Just amazing. So now, most importantly, you guys came here to see some hot stocks. So let's get all the formalities out of the way and get right to it. Hopefully you can see the screen where all the stocks are. We're looking at a watch list of stocks. Now in VectorVest, it's important you understand that a watch list is not just a place to house a bunch of stocks in VectorVest, where, in some other programs that are out there, I suppose you can see things like percentage change on the stock price, and maybe you can dig in and find out a little bit of earnings or upcoming, news items and things that are hitting the airwaves. It's very limited in the things that you can receive in terms of useful information. So the VectorVest, we pride ourselves in delivering the useful information that you truly need. And we have a list of stocks here, and they're actually rank ordered from top to bottom. Now, it's not to say that the ones at the bottom are any worse than the ones in the top necessarily, because as I'm looking at the numbers going down this list and what's coming down the pipe, everybody did a good job, at picking stocks this month. But let me cover just some of the key indicators that we have, what separates VectorVest from everybody else, then we'll start looking at the individual stocks. So first thing you see, of course, is the company name, followed by the symbol. Then you'll have the exchange column. In the exchange column, the little X next to an exchange letter indicates that options are available on that security. And then the actual second letter there, the N or the O, or in some cases you'll see an A, they represent the exchange that it's traded on. So N for New York, O for over the counter or NASDAQ, A for American, B for bulletin board, so on, etc. So what we have here is mostly New York and NASDAQ stocks, with the exception of Converge Tech, which might be more of a gray sheet type of an instrument there, but a good one. Okay, if we come across a little further, we'll see price. Then we start to actually get to some useful information. Value is what we feel the intrinsic value of these companies are right now, what they're truly worth right now. And so you can start to make some decisions based upon where price is in relation to value. If price is under the value, it's undervalued. If price is over the value, it's overvalued, or at the very least, selling at a premium. Some stocks always trade over value. If you've ever heard of, stocks like, say, an Amazon, or, they demand premiums, right? So it's not necessarily a bad thing if a stock's price is over its value. You just got to realize you are, in fact, at the minimum, paying a premium. So there's more to the story. As we continue to work across, looks like stop price has been pushed to the left here. It's traditionally out past the recommendation column. But that is our 13-week adjusted stop price, STOP price on every security. So that tells you a price at which you would consider selling any of these stocks. And that price does move on a day-to-day basis because, again, it's based on a 13-week adjusted average. Now, the key term there, of course, is adjusted. More on that as we continue to work our way across the list. But in essence, the adjustment has to do with the fundamentals of the stock. So if it's a very strong fundamental stock, say one of the strongest in the database, it'll actually have an adjustment downward to keep you in that good, safe stock as long as possible. If, however, the stock has some of the weakest fundamentals in the database, it would then have a strong adjustment upward, sometimes so strongly that it consumes price. There can be some large adjustments to that 13-week average depending on the stock. Okay, I think that's important to understand. As we continue across, you can see dollar change from the prior close, percentage change in relation to that dollar change from the prior close. Then you get to what I would call the fingerprint analysis of VectorVest, which is our 4 core proprietary indicators. You're going to have RV, RS, RT, and VST. VectorVest gets its name from a vector formula, and we're going to be walking through the elements of that formula over the next 4 columns. The first column here, relative value, that looks at the upside potential for any stock that you're interested in. And it is a 1 to 3 year time horizon. Above 1 is favorable, below 1 is unfavorable. The higher above 1 it goes, the more favorable the reading. So we can see there at the top with Converge Tech, not my stock, but somebody did a good job. That is anything over 1.4 is excellent. Okay, so that you're far better off owning Converge Tech over a 1 to 3 year time horizon than sinking your money into a AAA corporate bond, for example. You should get far better price appreciation in Converge Tech, all things being equal. Then you have relative safety. Relative safety looks at the consistency and predictability of financial performance. In layman's terms, that means companies with high RS numbers are companies that do the best at growing their earnings quarter after quarter after quarter, year after year after year. Okay, there's a lot of factors in relative safety, a baker's dozen. Business longevity, price, hopefully lack of fluctuation. All those things can have an impact on the safety rating, many and many others. But the key thing is earnings and earnings performance, not only from the past, but also out into the future, are all kind of factored in to that number there. Okay. Now, in terms of relative timing, that's going to be our key timing indicator. It's very much telling you the short-term trend of these instruments. And so the higher it goes above 1, a faster a stock is moving upward. The lower below 1 it goes, the faster a stock is moving downward. There's a lot baked into it. It looks at dynamics of price history. It looks at a lot of factors, okay, in determining how strongly that instrument is in fact trending. It's super smart, super good. So then we take all 3 of those, we combine them into one single master indicator on every stock called VST, which is value, safety, timing, vector. So it's going to look at the RV, the RS, and the RT and combine them all into one master indicator for each stock. Okay, so in terms of weighting, anybody that's familiar with physics and a vector formula will realize that some square roots and some weighted sums and everything's being factored in here, right? So just keep it very simple. We slightly emphasize the relative timing score. We slightly de-emphasize the relative value score, and we normalize the RS. So just know this. Why do we do that? We do that because at the end of the day, we want you guys buying stocks that are rising in price when you buy them. So we prefer that relative timing is above 1 and rising when you buy a stock. Now, there's always exceptions. At market bottoms, we may do some things that deviate from that plan, but that's going to be 2% of the time. Generally speaking, you want to be buying stocks who have nicely rising relative timing values. All right, so with all that, let's then just kind of bump into the 3 stocks that I've got, and I'll turn it over to the next 2 gentlemen here shortly. So I'm going to go with Pool, Target, and Academy Sports. I'm going to let these guys do all the gunslinging this week. I'm going to go for the easy money. Let's go take a look at some of these stocks. Now, actually, before I pull up the charts, if you look at them, here's an example of a stock trading at a premium. You've got Pool clocking in at $468. We have a value on it at $344. However, having said that, the upside potential over the next 1 to 3 years is still very, very strong at $152. Okay. It also packs a punch in terms of safety. They're very consistent. They're very predictable at making money quarter over quarter, year over year. And they're rising in price fairly modestly and nicely at this time. They're not going up super fast, but they're going up at a pretty good clip. Okay. If we look at Target, up in that same neighborhood in terms of upside potential, up there above 1.5. Safety rating also coming in very similar caliber at 135. Not quite to that excellent threshold, but very, very close. And then the timing also fairly strong here. If we look at Academy Sports, a bird of a different feather here. So I tried to mix in more of an aggressive pick without taking on exceptional risk, because the stock market's really come to a bit of a slowdown, hasn't it? And so I figure if I'm going to reach into the aggressive spectrum, I'm not going to be reaching too far into that spectrum if I can help it. But relative value is one of the strongest on the list, if not the strongest. So it's got the strongest upside potential on the list. Converge Tech is coming in very close though, and so is Intravision, up in the same neighborhood, right? The safety rating, you can see that this is an aggressive pick. It's got tremendous upside, but it does carry some risk. That number is below 1, right? Relative timing, however, this stock is moving higher and moving at a pretty good clip. So let's take a look at the charts and we'll just go from there. So we'll start with about a 6-month chart here. And really what I've laid out on the screen is what we would call in essence, our VectorVest simple approach. I mean, it really is. I stuck with the simple approach for this particular panel. You guys have seen me do some other things from time to time. I think I looked at Fibonacci retracement as one of the things last time I was here on Fulgent, which turned out to be a pretty good pick. But here's VectorVest simple, man. We want to find smooth sailing, high flying stocks that have smooth sailing, high flying earnings per share down here on the bottom. Okay. In essence, that's what it boils down to. And so some people might say, well, my goodness, that stock's been on a tremendous uptick in the market for some time now. I'm a little fearful in buying that guy because it's made a move, to the tune of more than maybe $100 or so. I can't quite see the scaling. Okay. But it's made a big move, right? Well, the reality is we lean on this indicator down here at the bottom. It's called EPS, or earnings per share. And so the key thing for you to know is that is a window into the future, okay? So for every data point that's plotted down there, it's plotted down there on a 12-month forecasted lead. So it's a 1-year leading indication of where earnings will be a year from now. If we look at the hard right edge, what we see is out into the future, 1 year from now, earnings are expected to continue to be rising, okay? So you can see the slope of earnings coming into today. It's clearly been on the rise, and you can see then that they're expected to make more money a year from now, and a lot more than they're expected to make right now, okay? So all things being equal, investors like that. I don't know about you, but if I'm going to put my money, my hard-earned dinero, down on a stock, my expectation is I want to put my money where money's going to grow, right? And so my main objective here is to place you or pinpoint stocks for you where your money is likely to grow. There's no guarantees, there's no certainties. But if Pool makes a lot more money in the future than what it's making now, what are the odds that that stock price is going to be higher a year from now than it is now? Well, I can tell you, on my personal experience, VectorVest is in business to this day because of this kind of analysis. There is no stronger correlation in the stock market to future stock price rise. No matter what anything's being said on any chat forum across any board on the internet these days, there's no stronger correlation to stock price rise than earnings rising in the future. Okay. Money goes where money grows. It's an old adage and it's true to this day. So that's why I'm going to go ahead and pick Pool. I also happen to be a Pool owner, and I recently had to replace a salt cell. I have a saltwater pool, and I had to do that for the new owner because I just sold my house. And that darn thing cost twice as much as it did 3 years ago. I couldn't believe it. I had sticker shock. It was more than $1,000 for a salt cell now. I paid like $500 or less last time I had to buy one of those things. But pools are premium right now. I got a buddy trying to build one, and they're telling him next year. Now he's trying to build a fancy one, but they're telling him no way, Jose. And he started asking in April. They said, well, before the end of this year, and now it's going out into next year and so on, et cetera. Those stories don't matter. What matters is earnings is rising. And I think what you're seeing is that's a result of the demand that we're talking about. And so who cares what the story is? What we care about is what earnings are doing and what they're likely to do in the future. And if we look at track record here, just quick, here's a company, they're not new to growing their earnings in a dramatic way into the future. Earnings have been rising on a 1-year forecast for a long time. And so if you're expecting this party to end, we got news for you. It doesn't look like it's ending anytime soon. Okay, let's go to the next one. Take a look at this one here, and then I'll let you guys kind of chime in on any of the three. Just try to keep us on pace today. Here's Target. There's no mystery. People are starting to get back out, and certainly household staples, things of that nature, are very important. The reality is, I really don't care again about any of those kinds of stories. What I care about is what have you done for me lately? I care about the slope of the price chart. I care about the slope of the earnings chart. I can see earnings is actually charging even harder this year, right, on a 1-year forecasted basis than it has charged at any time I can see back on that earnings chart right now. Okay, so here again, if you're thinking Target's a little too hot, that's a reflection of the earnings is super hot. And so as long as that earnings keeps marching up that page down there on a 1-year forecast, that stock price is likely to do the same. Now, we're not talking about market interplay here. So this is all things being equal, no major stock market collapse, any of those kinds of things. If the market holds up, this stock will be one of the top performers. Okay. If we go down to the next one, here's Academy Sports. People are sick of being inside, and it's become clear. I've been watching. How many times have we seen in the Jockey Club, guys? We've been watching, and not just Academy Sports. A lot of different sporting companies have just had tremendous, tremendous years. So this one's newer to the party. We can see that the chart only goes back to looks like October of 2020. But just look at that beautiful price performance. It's moving up in a nice, it's got some volatility to it. It has ebbs and flows, but it's a nice higher high, higher low pattern. Does seem to be a bit sideways here over the last several days, but we've seen that before. And I think we're in an area now, just like where we've been recently, where we should start to find some support. And don't forget, this 20, is this a 20 or a 40? It's a 40 right now. It likes to find some support near that 40. A lot of times I might even snug something in. Let's just look at what a 20 looks like on this guy right now. The 20 might even give you a little bit of a better guide. It's one that I use a lot more religiously. You can see all of these, and look where it's trying to find support right now is right on that 20 with the Dragonfly Doji, okay? Earnings season is right around the corner, and I expect Academy Sports will have a big earnings round. I think a lot of stocks are going to have big earnings this coming quarter, okay? It's not just what I feel. We're just looking at the chart. We're making the observations. All the numbers are checking out, and that forecasted earnings is rising. Guys, if you guys want to chime in on any or all of these stocks, fire away.
I'll let Patrick start.
Sure. There's an echo all of a sudden. So one of the first things I noticed, Steve, with all your picks, looking at RT, they're all above 1, but at the same time, they're all downtrending. So yes, their uptrends are still intact, and yes, they're still in uptrends, but it looks like momentum is definitely waning on all 3 of these. So, yes, they have good earnings. They're great picks, and that's something that I noticed, trying to find stocks to bring to today's session is it definitely makes it hard. There's a lot of places out there in the market that are overbought right now, and we're seeing a lot of bearish divergences being created. And so I know exactly where the issue lies, but
you mean
that
like
is one thing, especially if people are wanting to jump into them right now, they may, find a better price point if they take a little bit of a breather.
Yeah, I mean, the thing that I see though is this, even this stock right here, it's done that before too, slowed down for a little while. I wouldn't expect a big spill, but you never know. I hear what you're saying. I definitely hear what you're saying.
My input, if I look at all three of these stocks are in hot industries. So I hear what Patrick's saying, and I agree. Maybe you wait for better buying opportunities, but the graphs don't lie. It's sort of like Shakira. Her hips don't lie. These graphs don't lie. So if I keep that in mind, these, outdoor, I've been saying that in the Jockey Club for the longest time, along with Steve. This is a hot industry. Whether it's Academy Sports or Vista Outdoor or even the RVs, all of that space is heating up and heating up big. I just saw a story out there that the national parks they got to shut them down every so often because so many people are out there. This is a hot space. Right now, it's got pulled back. I like that Steve had either the 20 or the 40-day moving average. Use that as a guide to know. Patrick is right. It's pulling back, but I love that it's hovering right about that line, so it gives a good level of support. When I go and look at Pool is how come I can't move it? What did you do?
I didn't do anything.
No, Joey broke it. Because now I can't move up. I'm trying to get to the next stock. There's a slider bar right here.
Maybe I need to do it, or do I need to stop?
All right, yeah, because Joey broke it. No. Hit the slider bar to the right, Steve. Yeah.
I gave you control back.
Okay. Sigh. You broke it. Anyway,
I'm watching old guys mess around with computers.
It wasn't me. I'm the one that doesn't know jack bone diddly about stuff. It's Joey. Joey broke it. Anyway, all three of these stocks, whether it's ASO, whether it's Target, whether it's Pool, just like Steve said, it's a hot industry right now. And Target, one thing that I'm looking at for Target is back to school. A lot of kids are going to be going back to school this year. Target is a great stock in that space in and of itself, and I think they're going to be spurred up by school sales, definitely. So I can't do anything, Joey.
You can't close this or anything?
I can't. No. Sigh.
Want me to request control back?
Allow.
Well, you have line style. Look.
What? Who did that? You so dumb. All right, there we go. There's Target. Target, again, I think, look at the earnings, look at the equity curve. Target, I think, is really going to be spurred on by back-to-school sales. And Pool, everybody still wants to get into a pool. Pool is anything dealing with leisure, anything dealing with outdoor stuff is the way to go. So wait for better buying opportunities. And actually, I would use either the 20 or the 40-day moving average as a way to get out of the stock to capture profits. But look at even on Pool, it pulled back to the in this case, the 20-day, and look, it's still running up. It broke above, gapped up, consolidated, the graphs really don't lie. 3 good picks. And, if they're pulling back, both Target and Pool are still rocking and rolling, hitting new highs. The only one that has the pullback actually right now, Patrick, is ASO. The other two, I would look at 12 cents higher than the high on Target, 12 cents higher than the high on Pool. And as far as ASO, right at that, I would wait for it to take out that high. So that's my 2 cents on that. 3 good picks. All of them had good RVs. I like them all. All right, I'm done. I'm off my I got off my soapbox. That's right, I got off my soapbox. All right,
Glenn, I'm not saying that they're having pullbacks quite yet, but with the bearish divergence, it's something you always want to keep in mind.
I'm with that, except for this market is weird. This market is creepily, slowly moving up. This is a weird feeling market. And Steve, if you want to chime in on that real quick, this really is a market unbeknownst to what we've normally had over the years. Do you agree with that or not?
Yeah, I mean, I think it can be explained. Huge amounts of stimulus obviously have hit the markets. There's still the Fed has still yet to ease up really any of its major endeavors, And here again, as we reopen and companies actually start coming back online more and more, I think earnings are actually, I've already said it, I think this coming earnings season is going to be a blockbuster. So if we're waiting on a catalyst, I don't think we have to wait much more than a couple more weeks. The whole monkey wrench that could hit the system is if they get more aggressive with their policy in terms of raising interest rates, which I don't think is out of the realm of possibility. But until the Fed backs down at the very minimum on some of the things that they're doing, I don't see any way this market isn't higher. Coming through the rest of this year, I just can't see a way that it will be lower.
Understood. All right, Patrico, it's on you, homie. Stormy Baloney. Oh, home biscuit.
All right.
Somebody, I had to use
Request
that.
control.
Home biscuit.
There we go. You guys got to allow me control. Perfect. There you go. All right. Thank you, guys. Welcome, everybody. My name is Patrick France. For anybody who's not familiar with me, every single Thursday, I go live on both Facebook and now YouTube, where I stream the mobile app and talk about new functionality, new features, different ways to trade and how to really utilize the mobile app to do those things. Actually, tomorrow we have a new live stream coming for you guys tomorrow, where there's a watch list, or actually a pair of watch lists that we've put together with the help of all of our users or all of our viewers that tune in every week. I've done a revamp of it, or a refresh of it, that we're going to be announcing tomorrow. We're going to be walking through it. So if you're interested, whether you're a desktop subscriber and you have access to the mobile app, or if you're just a mobile subscriber, feel free to tune in on either our Facebook page or our YouTube page and join in. Love to have you guys and check out all the new stuff that's coming out for you, or coming out very, very soon. All right, so getting into it, I have two separate picks here today. Steve had 3, Glenn has 2, and I also have 2. And the 2 picks that I've chose for today's session is SGH and also FAZ. Now, SGH is more of the bullish pick, with the market going higher right now. Yeah, of course, we want to have a bullish pick in there. But also because of what I was talking about when we were looking at Steve's picks with the bearish divergences, those types of things happening in the market, I'd rather err on the side of caution and have a contra ETF in my back pocket, just in case I need it. Rather be prepared and not need it than need it and not be prepared. Kind of the mentality I've always approached my trading with, so that's the way I approach today with. So SGH just had a earnings report as of last night, I believe it was. They blew their earnings out of the water. The company is in the semiconductors field or industry. They are consistently making money, growing their money. We'll see that here in a second. But I like the pick. It's in a strong field right now. It's had semi pullbacks recently with all the chip shortages that people were worried about. Could create a good buying opportunity. So we're going to take a look at that one first. And then the second one, once again, is a hedge in the market, just in case the bearish divergences that we're seeing do start to take effect and do start to turn into more than just a warning sign. We definitely want to be prepared with that as well. So looking at it, SGH has good long-term potential, not necessarily the best, but still good long-term potential. It is more of an aggressive stock, so therefore the RS is below 1 at 0.88, telling you do incur a little bit more risk with this compared to the average stock out there. But then we look at the RT 1.73, second highest RT in the list. So that was clearly going to be one of my first picks today. Also, even with the big price jump we're seeing here today, it is still undervalued compared to its value of 73.59. Second one, FAZ, because it's an ETF, VectorVest makes analyzing ETFs extremely easy. Because it's an ETF, it doesn't pay or doesn't do quarterly reports or earnings. So therefore, the fundamental indicators, the RV and RS, are always going to be at 1. Therefore, whenever analyzing any ETF out there with VectorVest, your primary focus is RT. And RT is at 0.82. But once again, this is that play to keep in your back pocket and have it just in case. So we take a look at both of these. We'll go ahead and pull up the graph real quick. There we go. Let's go 6 months. All right, so SGH, you've had a pretty consistent run, pulled back off of the highs from about the middle of March, which was that pullback in the semiconductors. Everybody was worried about the chip shortages. You saw a lot of semiconductor stocks pulling back or selling off. You saw a nice base being formed, a lower high or a higher low, excuse me, a lower high coming into the most recent run up that we've seen, and then the big explosive move here today after the earnings announcement last night. So what I'm looking for is that we can not only close or not only breach that high set or the previous high set back around the beginning of March or April, but also continue to get followed through from that or close above that as well. So you can see we hit that here today, shown by the new high right at the very top of today's candle. But we have pulled back a little bit off of that. I think there's been just a little bit of profit taking going on overall in the market because we had the Fed minutes that came out about 36 minutes ago. So you've seen a little bit of profit taking going on in different areas. No surprise to see that pulling back a little bit. But as Steve mentioned, earnings are going to be the engine that drives stock prices higher over time. And if we look here over the 1 year, SGH's earnings have been phenomenal. They're continuing to grow, and that's setting it up for good long-term potential as well. So do you guys want to take a look at this stock first, or do you guys want to go to the second one and then analyze them both?
Let's analyze them both. That's my opinion.
Right.
Steve?
That works for me.
Yeah, that's fine.
Okay.
All right, so that's my first one, SGH. Second one, going to be looking at FAZ, the Direction Financial Bear. I believe it's a 2-time on the financials. When I was looking at it, I've been watching some of the bank stocks, especially with all the focus on the Fed and all of that going on. I've been focusing a lot on the bank stocks to see what they're doing. Being based right outside of Charlotte, BAC or Bank of America has been one of my favorite bank stocks to trade since I started really getting into it. I've talked about it over the years. Anybody in the Jockey Club probably already knows this, but for anybody tuning in for the first time, just to give you a little background on that. So I've been watching Bank of America. Bank of America has been consolidating recently. You saw some bearish divergences popping up as well over the last 3 months or so, where price has been moving higher, but all technical analysis and all technical indicators have been moving lower, which is why I made the comment about the bearish divergences we were seeing earlier with some of the other picks. But because of that, I've been very cautious with this. And if we zoom in here, because this is over a 1-year time frame, obviously markets have been moving higher, so this contra ETF has been moving lower. But if we zoom in, let's say to a 6-month roughly time frame, 4 months exactly, we can see we have lower highs being formed here, but just recently we have higher lows being formed. Let me change my layout real quick, get my layout set back up. There we go.
Click it again.
There we go. All right.
There you go.
All right. So basically, we are in consolidation. We do have what we like to call a wicked wedge being formed, which shows simply, as I stated a second ago, consolidation. Now, you hit the top part of the wedge. Stochastics tells us we're in overbought territory. Didn't stay there very long, came tumbling back down, creating the new bottom to the wedge. And looking at stochastics, we're in oversold territory now. So at the bottom of the wedge, we're in oversold territory. We don't have very much higher to go. If you're looking to take advantage of this move, though, obviously jumping in at first glance is not the best approach to take with this one. This is going to be one you want to see the breakout occur before jumping on board with. So what we're looking for is price to not only hit that upper part of the wedge, but also break above it and close above it, and then get followed through the next day. If we have that and stochastics tells us we still have more upside room to go, then that would definitely be a very bullish sign that I would look for as confirmation of, okay, it's time to jump on board with these. With all the stuff going on with the housing market, housing has been extremely hot, but then again, forbearance programs are starting to come to an end, and that could really throw a big wrench into the housing market. It's one of the things I'm, worried about is housing prices have skyrocketed so much since the beginning of the year. And once forbearance comes to an end, it's it's going to be interesting to see how the housing market stands, because if you're not familiar with it, if you're on a forbearance program from the pandemic, you can't put your house on the market. So you have roughly, I believe, 12 to 13 million Americans out there that were on the forbearance programs. Some of those may not be able to pay their forbearance off, so they may have to foreclose, which would increase supply, drop prices. Banks would definitely be at the brunt of that move. Also, for anybody who's been following, the Fed and what they have been doing, at the end of the second quarter, you had almost $1 trillion in reverse repo rates going on. So there's been a lot of things that have been, not sitting necessarily the best with me, which is why I want to have this as the play to keep in my back pocket, ready to go in case we get that breakout. If not, no harm, no foul, but rather have it and not need it than need it and not have it. So that's the 2 picks I have for today.
Kick it off, Steve.
Not much to add. I mean, I don't mind the idea of introducing a contra ETF. I mean, July is usually a tough month for the stock market, and the market does tend to peak in the month of July. There could be some short-term opportunity there. Again, I think as you get into earnings season, a lot of what we think turns into what's actually happening. So I think we'll get a lot of insight on these banks as we roll through. They're up front, right, on the new earnings cycle. So we'll know pretty early, if some of these things are truly becoming a problem for them. I'm looking at the earnings on a lot of the stocks in the banking sector in VectorVest, and earnings are actually rising. Although, the prices of the instruments, there certainly seems to be some nervousness out on the market. I mean, I'm seeing some head and shoulder type patterns on stocks like JP Morgan. Now, they're a long way from triggering, but, they're in consolidation. I would say it's fair to say the banks are in consolidation on a little bit of nervous ground. So I don't mind the pick. And I thought the other one's quite good, actually. So good picks.
I'm with that. I am interested to see how earnings fare out for the banks, and the banks will be the first ones to hit, and that's going to be a key factor for FAZ. And Patrick's right. If it doesn't work out, no harm, no foul. It's nothing bad to have it in your back pocket just in case. I just don't know. I think
the low-hanging fruit, personally, is the small caps.
Yes, I still think that too.
The Russell and
I think that's where the money's going to go. The money's going to go to the low-dollar risk-on stocks, because that's what's been going on for the most part. And I got a lot of things running through my mind in regards to what's going on in the market. A lot of it I talk about in Trending Thursday, so make sure you hear from me tomorrow on Trending Thursday. But there's so much going on, and the Fed doesn't want to give up on what it's got going. The Bulls don't want to give up the reins. The Bears are sipping in, going, "Yeah, we got to take." There's a lot going on, but I don't mind the pick. Just to have in your back pocket. And the other pick, SGH, I think was a good pick. A little bit more volatile than I'd like over a 3-month period. And that was news driven. And let's hope that the news holds out for it. I love a news driven stock as long as the news can hold. As long as the news can hold, I love a news driven stock. If you weren't already in it, it's tough to get into it now because it pulled back a little bit at the top. But it's good news-driven stock, and I'm all for it. We'll go from there. All right. Anything else before I take over for the last little part of it?
So, and I had to find a wedge, to keep everybody happy.
Of course you did. And Jay loves it. Jay loves it. The Wedginator. That's in my Jay voice. The Wedginator. Yeah. All right. Before we get into the last 2 picks, real quick, let me talk to you. My name is Glenn Tompkins, senior instructor here. I've been here 17 years. I've had my hands in everything in the education department. I partner up with Steve and Patrick for the Jockey Club, the Trending Thursday, every Thursday on YouTube. Just my hands everywhere. And if you know me, you know I like to have fun. So I'm a little different than the majority of people in the education department. Sometimes I say things that I ain't supposed to say. And then my good friend Steve comes to me later, or Ray, and says, he wasn't supposed to say that.
That's why they love you, Glenn.
That's why they love me. All right. So real quick. Again, don't forget to register for our free Trade Like a Pro webcast today at 6 p.m. It's going to be on this channel at 6 p.m. Don't forget to register for it. Jerry is going to talk a little bit about our Trade Like a Pro course. Don't forget also, this is our financial freedom, financial independence month. And we're going to give you all access to our free access to our income investor video training series. It's free access to it. And it's all about helping you guys to become more financially independent.
Those links are in the chat.
And both of those links are in the chat, says Joey. Thank you, Joey. I will see you out in the parking lot after this session. I got you, Jay. I ain't worried about you.
Oh, you're talking about tomorrow?
He's talking, who's saying the who?
Talking to Mark.
Oh, he's talking about, listen, Mark always, every so often gives me super chat. You don't mess with Mark. You don't mess, Mark, I got you. I got you. He always makes sure that, he always throws some super chats up in there. For anybody who doesn't know, you can give us some money for what we do if you ever feel like it. I never ask for it, but it's always appreciated if you do. All right, and we're going to give away 2 mugs. You got to be here for the mugs in order to get the mugs. All right, type in mug for that. All right. Are you happy, Joey, that I did all of the housework?
Yeah, that was pretty good.
All right,
Pretty good for you.
Pretty good for me. All right. Would you let go of my mouse?
You want to just look at you the whole time?
No. Oh my gosh. It's all right. All right, let me go clean up this graph. All right, so there's 2 stocks that we have left. And I am always the picker of the low-lying fruit. I really am. You notice that a lot of the times my stocks are at the top of the list because it's easier for me that way. Steve does a lot more research than just about anybody on here that comes on, followed probably by Patrick and Todd. Majority of my research is done for Trending Thursday and our YouTube videos. But nonetheless, I found 2 stocks. The whole idea for me, if I was going to look for stocks for you to invest in for the summer, I love that all of the stocks that we picked had RVs above 1. These stocks have good upside potential. That was key. And I think we did a good job on that. Not all of them are as safe, and that's fine, especially if you're looking for stocks that have good upside potential. You might be willing to give up a little bit of risk for that. And the relative safety, Steve did an outstanding job talking about all of our indicators. And all of the stocks are in uptrends. I think this is a great recipe of stocks for you to take advantage of to invest in for the summer. All right, my 2 stocks, I have a Canadian stock, CTSDF, Converge Technology, and Entravision, which is a company which specializes in media for the Hispanic community. Very interesting, but the stock is going up. Both of these stocks recently took part in acquiring other companies. You gotta love a company that's growing by that means. Both of these stocks did pick up companies recently within the last 24 to 48 hours. Now, one thing I like about Converge Technologies, it deals a lot with information. So there's 3 stocks that meet my expectations on information dissection. Converge, DD, which just came out, and Palantir. 3 companies specifically dealing with information or data to turn it into information. I'm thinking that in the near future on our other YouTube channel, I might have to do a Converge Tech versus DD versus Palantir video because they all deal with data to turn it into useful information in different ways. So I'm thinking I might have to do a video like that. You think that sounds good, Joey? All right. And DD is just brand new. All right. Something else that caught my attention about Converge, I looked at the financials behind it. And since 2020, their market cap has gone up nicely. It went from 90 million to 198 million to 559 million to 683 million. And most recently, that's at 1.56 billion. The company is growing. So in this space of information and data, this company is definitely, and you know something, I'm going to do something. I didn't plan to do this on the fly, but I'm going to do this real quick. I wanted to see where it sits. Look at that. Out of 218 stocks in that industry, software business, Look at that. CTSDF is number one by VST in the list of all of the stocks. So it is a best of breed. It is definitely a best of breed out of 218 stocks. And I just did that as I was watching the market cap growth since 2020. I think that that's not a bad pick. We all know about apps. Digital Turbine is number 3 in that industry. Oracle, other stocks are in here. DocuSign, CRM. How about CTSD is the number 1 in that, is in the software security. So Donald, I'm still going to look at that because that company Palantir does deal with the changing of data into useful information. So I'm still going to look at Palantir along with the space of CTSDF and DD, the new stock that just came out. So that was interesting in that perspective. And EVC also picked up a new company just recently. So that's all I'm gonna talk about in regards to the companies, what they do. I like that, Steve. I'm gonna put this out to you. As we're in the market that we're in, I foresee a lot more companies buying other companies. Do you agree or disagree with that? Does he have his headset off?
That's hard to say. I'm
Oh,
not going
there
to
we
step
go.
out on that limb without more time to think about it.
Okay, that's fine. That's fine. I'm thinking that way. I just wanted your insight on that. Nonetheless,
I think you're going to see a lot of manufactured earnings and things like that potentially, but I'm not sure about mergers, acquisitions, although you would think that some of these larger companies would scoop them up, but I'm not willing to commit to that one just yet, bud.
Understood. All right, that's fine. Again, I just wanted your input on that. All right, let's go take a look at these graphs. Before I do that, both of these have good RV values. EVC, relative safety, right flat, and you're going to give up a little bit more risk on CTSDF. They're both moving up. I love that not only do they have positive earnings, they grow their earnings. CTSDF is growing their earnings at a clip of 49% a year. So, man, you can't. And Steve says it's a window into the future looking at the earnings per share. Let's go look at the stock graphs. I'm going to put on my graph layout specifically for swing trading. Put this on a 3-month graph. Whew, look at that. Good, googly muggly. Good, googly, woo-wee. I got a woo-wee. Hold on. Is it good googly muggly?
Good googly muggly.
And then I got a ooh-wee. Did you take away my ooh-wee?
Ooh-wee.
Look at that. Beautiful bottom left, top right. Love the rising earnings. Like the earnings growth rate. But I also put on sales. Sales growth is falling, but sales itself is growing up a little bit. But you can't, I'm going to actually take off that information. I want to look primarily at earnings and earnings growth rate along with the equity curve. Beautiful volume for the last 5 days too. Look at that. Not only is the stock's price going up, it's going up on good volume. I'd like to see the stock take out that high before you get in. But once you're in, I would use, there you go. What is that? That's a 20-day exponential moving average. I could use that as a definite guide to know when to get out of the stock. It keeps me from not sweating about getting out the stock at the right time. And the second stock, EVC, man, big down day today. Probably wouldn't pull the trigger on it today. Like the earnings per share, like the earnings growth rate. The volume is starting to dry up a little bit. I would wait on that stock. Again, big down day. Notice that it's nowhere close to the 20-year exponential moving average right now, which on both of these stocks I would use as a gauge to know when to get out. Definitely, before I get in, would like to see the stock take out that high. But remember, these are stocks to invest in for the summer. I think that both of these set up really well for the purposes of doing that. I would just wait for EVC to come to me before I pull the trigger. All right. Anybody, you guys wanna chime in on either one of these or both
Go ahead,
of them?
Patrick.
So EVC, I'd be extremely careful, especially after that high marker there. Strong volume, a lot of selling. Yeah, that's a tall tale or classic top pattern right there, if you ask me. But that's you can do whatever you want on that one.
Absolutely. I just put the story behind it. Everybody's got to still make their own decisions. I still like looking at that 20-day exponential moving average as a way to gauge to get out of it if you're currently already in it. But there's no ifs, ands, or buts. That's a big down day. Oh, one day doesn't make a trend. Woo! I got to use it. That's right. One day doesn't make it a trend just quite yet. We'll see. Steve?
Yeah, so I would look at the 20 as potential opportunity, but you'd have to get something like Glenn, take your cursor and go back to when it broke above the 20. You see that big tall volume bar back there? That's what you're waiting on, you know? So I actually don't mind buying weakness at all. I think of pullbacks as opportunity, particularly on stocks whose earnings is growing. Because if price comes down and earnings are still rising in the future, you're getting a better and better deal the lower it goes, So the question becomes, what do I look for to try to find an opportunity? There's lots of different ways to get there. Some sexier than others. 20 is pretty rudimentary, but you know what? A lot of professional traders use the 20, at least some of the better ones. Yeah, you'd want to pull back. You'd want a bar that kisses that line, okay? But the key is you don't just buy that. You don't just buy pure weakness. It's got to stop falling, right? So what do we look for? We look for the big up day that usually follows if it's going to get going again, and we look for the big volume. And then we look to buy the next day if it's continuing to rise.
If it's got confirmation.
I would be looking for a pullback entry here on something like EVC.
Understood.
Yep.
And CTSDF?
Love it. Patrick?
Excellent. Patrick?
I like it. Yeah, don't really have anything bad to say about it.
That one is
running.
awesomosity, Glenn.
Awesomosity. That's a Glennism, baby. Woo! That's a Glennism, baby. Gotta love it. All right. One, thank you guys for being here. Two, you guys out there have some stocks to consider for the summer. I think that we brought to the table some really good stocks for you to take a look at. And number three, if you haven't already, hit the like button. Hit the like button. Brenda Van Ripper, you have won a mug. You have to
willpower.
tell me that you're here. Huh?
Willpower.
Willpower 112.
And Willpower has won the giveaway as well. Willpower, good. Willpower, you need to send an email to connect@VectorVest.com. Connect@VectorVest.com. And Brenda, are you here? Brenda is here. Excellent. You need to also send an email to connect@VectorVest.com. Both of the mug people were here today. Woo! Watch, they be in Canada, and they're going to be in Germany, and they're going to be in France, and we're going to send it all over the world. The shipping is going to be more than the mug, but guess what, folks? It's going to be well worth it because we love you. Woo! All right, so with that, our July hot stock panel is over. Don't forget, again, you can register for the free Trade Like a Pro webcast that's going to be on this channel today at 6 p.m. Financial Independence Month. We're giving you free access to our income investing video training series. You can take advantage of that as well. www.vectorvest.com/FIM, or look in the chat where you will see a link for both of them. All right, so until the next time, folks, Steve, thank you for being here. Patrick, thank you for being here. And be on the lookout. You have to make sure. How many likes did we get today? Well, I need to leave at 150 likes. Make it happen, folks, before we leave. 150 likes. Also, make sure you hit the bell icon so that you will be alerted to when the next hot stock panel will come out. I send an alert, the whole 9 yards. Let's get that up to 150 if we can. If you don't like it, then fine. We ain't coming back again. How about that? Anyway, thank you.
Like spike inbound.
Say what you said?
Like spike inbound.
All right, folks. So until the next time, adios, arrivederci, ciao, au revoir, sayonara, aloha for all my peeps in Hawaii. Salam, shalom, namaste, yasu. Until the next time, folks. See ya.
See ya.